Hello, Oracles. Well, what can we expect from the market this week, the week of March 3rd, 2025? So last week we saw a bit of a sell off and then kind of a rebound on Friday going into the end of the day. We do have a fear and greed index of around 20. So that's pretty darn low into the extreme fear range. So the question is going to be, are we going to rebound from here and then go back up, or are we going to continue falling down? Based upon what we saw in the crypto market over the weekend, saw a little bit of a rebound, little kind of a sell off going into this morning, but definitely a big spike yesterday as we saw the crypto market entirely just kind of skyrocketing back up. So we've got some things coming out this week with unemployment. We've got some feds coming out. We do have a couple of earnings, nothing major this week, but there's a couple of bigger ones that are coming out this week. So we'll see how the market's going to move, and I'll give you guys my predictions as to where I think we're going to go from here as well. So, as I said, as of Friday, we were at extreme fear at 20 on the fear and greed index. Scrolling down, when we look at market momentum, we're also at extreme fear. You see the line here, and we just kind of just bounced off of it and coming back up. Stock price strength is also at extreme fear. Stock price breadth, fear. Put and call options, extreme fear. Market volatility is still at neutral. Safe haven demand, extreme fear. Junk bond demand, fear. And so if you guys remember back in January, we were seeing similar patterns here. And if you guys remember back in January, we were seeing something very similar. You could see it dip down here, almost getting to that line. I mean, even if you look back here to when we bounced off of it, that was August when we had that big crash with the Japanese carry trade fears. That we bounced off of this line and then ended up coming back up and just bounced ever since. And then November, the end of November was the last time we were in extreme greed territory, and we have since just been bouncing down from there. So my predictions off of this is we are probably going to be doing, as I had been saying, is we're going to be bouncing up to neutral, not get back to greed, and then just go back down to fear. So this is basically what a giant dead cat bounce looks like when you're looking at the market and you're looking at, all right, well, we can still bounce up. I mean, we know when you look back at the great financial crisis, there were several times where we saw the market bounce up 5 and 7% after we saw a massive pull down. But then it kept on falling down from there, falling down over 50% over the course of a year and a half. So again, I'm not saying that's what's going to happen this time around, but when you're looking at, the market doesn't always have to keep going up, and we don't always have to keep going back and forth between fear and greed and all of that. And when you kind of understand what the different indicators look like as you're on a certain pathway and on a certain trend, then you can kind of understand, what trend that might actually be on. And of course, nobody knows for sure what the future is going to hold for the stock market. But when you start looking at, again, we're going to be bouncing between fear and neutral and just continuing to fall back down between fear, extreme fear, and neutral, that to me tells me that, all right, we're just never getting to that greed territory. And despite the fact that recently we hit all-time highs in the S&P 500, it doesn't mean that we're actually that strong. And again, this is one of those indicators that kind of tells me the underlying fundamentals right now are really not all that strong, and you can see us fall very quickly on that. So that's kind of why I'm paying attention to what's going on in the fear and greed index. And then you look at the different things that are going on between earnings and what the feds are saying, and then you can kind of really put the pieces all together. And so this week we've got construction spending numbers coming out today. We've got the St. Louis Fed president coming out to speak as well. We've got auto sales, and that'll be a big one, especially for Tesla. We should be getting numbers for Tesla out of China this week as well. So we're looking at all of these different numbers coming out for auto sales. That's going to kind of give us an indication of that. And we know that auto sales are going to be difficult this year. So this is a big one to pay attention to for you Tesla investors out there. Tomorrow, we've got the New York Fed and the Richmond Fed presidents both speaking as well. Then we've got the unemployment report starting to come out midweek. So we've got the ADP unemployment report. We were looking at a forecast of about 143,000 jobs, where last month we had about 183,000. So we'll see where that ends up falling. Factory orders are a big one too, because that's sort of like a PMI type report. And then Thursday, we get the normal initial jobless claims that we get on a weekly basis. Then we get the U.S. trade deficit report, which, of course, this is something that President Trump has been working on. We have a couple more Fed members speaking on Thursday as well. And then Friday's the big one for the unemployment. So last month we were at 4%, and we're looking at a forecast of a 4.1%. So hovering right around that low 4% range still, that's a good sign that we're kind of holding steady there. And that is better than, obviously going up. And it's not a bad number to be at that 4% unemployment, but the trend we still want to see and make sure it does not continue to go up. And still up that 0.1% is just like, all right, still it's still going up. And that's going to give us that indication that the Fed is going to keep rates higher for longer and they're not going to be cutting as much. Now, it does sound like we may be getting two rate cuts versus one this year, but we still have to wait and see what's going to be going on. And then after that, we've got a bunch of different Fed members, including Jerome Powell, speaking on Friday as well. So we could see a very rough Friday afterwards, depending on what we get for the unemployment report. And then looking at earnings this week, nothing huge. The biggest ones that I can see on here are going to be coming out on Thursday after close. We've got Broadcom and we have Costco. Now, Broadcom, obviously a big player in the AI space, huge over the last 5 years in growth. So we'll see how they're going to be doing there. And then Costco, obviously, is one of those premium wholesalers when it comes to uh, a lot of dividend investors out there love this one. I'm an investor myself in it. So we'll see how Costco does on Thursday as well. And so overall, I think it's just going to be another week similar to the weeks that we've been having so far this year, which is there's going to be a lot of still uncertainty that's out there, more volatility in the market than we had been seeing over the last couple of years, but I don't think it's going to be crazy. But I do think that there's a lot of different things that can move the needle strong one way or another. It's kind of where we're at right now in the market is it seems like the market moves significantly more than it used to on different types of news. Could be earnings, could be something that's going on in the macro environment, could be something that President Trump says. So many different things that are going on right now that just cause the market to kind of freak out and panic or get super excited one way or the other. There's just a lot of volatility. This goes back to my thought about how investors like my father, who is a swing trader, are going to do very well because you can get a lot of big swing trading out of this. Now, of course, you still have to worry about paying those taxes on all of that, and timing isn't very easy. I'm still more of a long term investor. So, for me as a long term investor, I'm just using these as buying opportunities, or in some case, just trimming off a little opportunities. I've really trimmed off everything I want to trim off right now. So, I just kind of wait for, when the market gets into moments like this, I'm a buyer. And then as we kind of go back up and push higher from here and rebound, I just kind of hold. And then I wait. And when we get this next pullback, that's when I add a little bit more. So to me, it's one of those dollar cost averaging and catching that falling knife, but catching that falling knife on a dip that goes further down. And again, are we really coming down? I mean, some places are, like looking at Tesla stock itself, that's crashing massively. Tomorrow I'll have the updated chart video out, but just looking at that one there, we continue to fall down. That one is a massive dead cat bounce. If you guys saw the live stream last week, we were discussing just that. It keeps on falling down. You get a rebound. Maybe we do push back up to $300 to test that again. But then I think we're going to continue falling down from there. And again, we're two-thirds of the way through this quarter. So we're really kind of taking a look at how Tesla is going to be doing with deliveries. And don't forget, we still have the EV tax credit right now. So when you're looking at the quarterly numbers that we're going to be getting next month, you can then say, all right, well, is the EV tax credit helping? And what's going to happen if we lose it? Are we going to be losing even more of these deliveries? So again, Troy Tesla has all of those numbers, but I'll discuss more of that later this week on the live stream. And tomorrow I'll have the video out to share with you guys with the charts again as well. So that's all I've got for you guys today. Thank you so much for watching. I appreciate all the support. Have a great one.